Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Beijing North Star Company Limited annual report. Beijing North Star Company Limited offers a diverse range of businesses and services. At its core, the company is involved in real estate development, encompassing the sale of residential properties and trading activities. In addition to this, it operates rental apartments, office buildings, conference centers, and hotels. The company also provides various services, including convention and exhibition services, hotel services, commercial property management, and hotel and restaurant management consulting. Furthermore, Beijing North Star Company Limited is involved in the development of multimedia information networks, system integration, and software development. This comprehensive range of businesses and services positions the company as a multifaceted player in the Chinese market. Beijing North Star Company Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Beijing North Star Company Limited trades at a lower price-to-book ratio of 0.3 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 76% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. One major contributor is the increase in convention and exhibition services, with a notable 6.9% year-on-year rise in events. This surge has been identified as the primary driver of revenue growth, highlighting its significant impact on the company's financial performance. Another crucial factor driving revenue growth is the real estate development segment. The recovery momentum in the first quarter of the year has led to increased revenue, with specific projects such as Beijing North Star Red Oak Villa, Beijing Jinshan Mansion, and Changsha North Star Delta contributing significantly to this growth. Furthermore, the company's integrated real estate development and operational capabilities have also been recognized as a primary driver of revenue growth. However, there are also factors that contribute to revenue decline. The real estate development segment has experienced a year-on-year decrease of 15.27%, primarily due to a reduction in completed area. Additionally, the Beijing Longfor North Star Lanjing project, project number 7, has not generated any booked revenue, further contributing to the decline in revenue. The company's debt level has undergone significant changes over the past year. While long-term borrowings decreased by a modest RMB 8833, loans from other parties saw a substantial increase of RMB 4,728,011. This shift in debt composition is further complicated by the introduction of new short-term borrowings in 2025, which had no value in 2024. In terms of interest expenses, there has been a notable decrease. The company reported a reduction of RMB 14,485 and RMB 99,571 in interest expenses. These decreases suggest that the company is either paying off debt or renegotiating more favorable loan terms. Overall, these changes indicate a shift in the company's financial strategy, with a focus on managing debt levels and reducing interest expenses. The company's performance can be divided into two distinct categories: well-performed and poorly performed regions or segments. On the positive side, convention and exhibition services generated a significant profit of $348,561, while convention and exhibition facilities reported an adjusted profit before income tax of RMB 492,087. Additionally, Beijing's four centers functions, strategic emerging industries, and advantageous industrial sectors all performed well. On the other hand, real estate development was a major area of concern, with both pages 10 and 11 showing significant losses of $2,953,043 and RMB 3,420,167 respectively. Other business segments also reported an adjusted loss before income tax of RMB 2,980,864. These poorly performed regions highlight areas that require improvement and attention from the company's management to rectify the situation. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries during the period under review. This suggests a stable and conservative approach to business operations, with a focus on maintaining existing resources rather than expanding or restructuring through external transactions. The company's financial history reveals a commitment to shareholder value. One notable aspect of this commitment is its practice of paying dividends. This decision demonstrates the company's confidence in its financial stability and ability to distribute profits to its shareholders. By doing so, the company acknowledges the importance of rewarding investors for their loyalty and trust. In addition to dividend payments, it would be beneficial to examine other shareholder-friendly initiatives undertaken by the company. However, based on the provided information, paying dividends is a clear indication that the company values its shareholders' interests. Concerns have been raised regarding inventory buildup in various regions. Specifically, the issue has been noted in third- and fourth-tier cities, indicating that it may be more pronounced in these areas. This problem is not isolated to one instance, as it has also been mentioned elsewhere in the report, further emphasizing its significance. That concludes the financial summary for Beijing North Star Company Limited. Feel free to comment below, and I will be happy to answer them when possible.